So chapter 8, audit report. Okay, so what is the objective of the auditor as per SC 700? The objective of the auditor as per SC 700, that is forming an opinion and reporting on financial statement, is to form an opinion on the financial statement based on the evaluation and of the conclusion drawn by the audit evidence obtained, to express clearly that opinion through a written format. Okay, definition: general purpose of financial statement. General purpose financial statement. See, financial statement are prepared as per in according with general purpose framework. Okay, what is general purpose framework? The financial reporting framework designed to meet the common financial information needs of a wide range of the users. The financial reporting framework may be a fair presentation framework or a compliance framework. Okay, so what is fair presentation framework and a compliance framework? The term fair presentation framework is used to refer a financial reporting framework that requires compliance with requirement of the framework and two things. First one, that it acknowledges management may provide disclosures beyond those specifically required by framework. Acknowledges management may provide disclosure beyond those specifically required by the framework, and acknowledges management may depart from requirement of a framework to achieve fair presentation of the financial statement, and such departure is necessary only in extremely rare circumstances. Okay, fair presentation, simple thing. It refers to the FRF, financial reporting framework, that requires compliance with requirements of the framework. It acknowledges management may provide disclosures beyond those specifically required by the framework, and it may depart from the requirement from the framework to achieve fair presentation, and the expected departure may be necessary only in rare circumstances. Compliance framework, it is a term used to refer the financial reporting framework that require compliance with requirement of framework but does not contain the acknowledgements as above. Matlab, like this it is not, it's just like you have to comply, that's all. Okay, languages to be used in audit report. When it comes to unmodified opinion, they say that in our opinion the financial statement present fairly in all material respect accordance with applicable FRF, or they'll say that it gives a true and fair view of state of affairs in accordance with applicable FRF. Compliance framework in accompanying financial statement are prepared in all accompanying financial statements are prepared in all material aspects in accordance with applicable FRF. Okay, and all material aspects. Then it comes to requirement. There are 4 requirements. First one, before that, just study consistency and flexibility of auditor reporting globally. As per 700 audit, it promotes consistency of the audit report but recognizes that flexibility may accommodate particular circumstances of individual jurisdictions. Consistency of the global report when audit may be conducted in accordance with SA promotes credibility in global marketplace by making readily identifiable those have been credible, and by making conducted in accordance with recognized standard. It also helps to promote the user's understanding to identify unusual circumstances when they occur. Forming an opinion. Simple. Forming an opinion. The auditor shall form an opinion on the financial statement whether they are in all material aspects or accordance with applicable FRF. In order to form that opinion, the auditor shall conclude whether the auditor has obtained reasonable assurance about the financial statement as whole or free from adult misstatement, whether due to fraud or error, and that conclusion shall take into these 3 things. First one, the auditor's conclusion whether sufficient and appropriate audit evidence are obtained. The auditor's conclusion that the SA 450 whether uncorrected misstatements are material or individual or in aggregate, and the evaluation as required. So this evaluation, it consists of 4 things. Okay, first one, the auditor shall evaluate whether the financial statement are prepared in all material aspects as per in accordance with the requirement of applicable FRF, and this shall include 2 things. The first one, qualitative aspects of the entity's accounting practices, including the indicators possible bias in management judgments. Should include qualitative aspects of the entity's accounting practices, including indicators of possible bias in management judgment. And there are some specific evaluation that you have to take care. So as per applicable FRF, the thing is financial First, adequately disclose the significant accounting policies selected and applied, and those accounting policies selected and applied, they are consisted in applicable FRF, and the accounting estimates made by the management are reasonable, and the information presented in FS are relevant, reliable, comparable, and understandable, and adequate disclosures are made to enable the intended user to understand the effect of transaction and the terminology used in FS, including the title of each FS. So there are 6 points. First one, disclosure of significant accounting policies, and those accounting policies are applied consistent or not, and those accounting policies are reasonable or not, information present are relevant, reliable, comparable, and understandable, and whether adequate disclosures are made or not, and then the terminology used. When financial statement are prepared in accordance with the financial report fair presentation framework, that case evaluation shall include that they have achieved the fair presentation or not. Then to check that, you have to analyze these two things. Shall include these two things. First, on overall presentation structure and content of the financial statement, and whether the FS including related notes represent the underlying transactions and event in the matter that achieves the fair presentation. The auditor shall include evaluate whether financial report refer to a description or describe the applicable FRF, evaluate whether the financial adequately refer to or describe the applicable FRF. Simple, bro. Then qualitative aspects of the entity's accounting practices. So there are 3 things. First one, objective of SC 700, simple to form an opinion based on conclusion drawn by the audit evidence, and clearly the opinion should be in a written format. And what is this opinion? The opinion shall form whether the financial statement are prepared in all material respects in accordance with applicable FRF. In order to form that opinion, it should conclude that he has obtained reasonable assurance whether the financial statement are whole or free from material misstatement due to fraud and error. For this, the auditor inter alia should evaluate the qualitative aspects of the entity's accounting practices and indicators of possible bias in management judgment. And then, as per SA 260, auditor should view about auditors view about significant quantitative aspects of the entity's accounting practices, including account policies, estimates, should be communicated to TCWG. And considering these qualitative aspects, the entity's accounting practice, the auditor shall become aware of possible bias of the management judgment. Indicators of lack of neutrality or possible bias in management judgment may include these 2 things. The selective correction of misstatement may brought or possible management bias in making of accounting estimates. Okay, 2 things: selective correction of misstatement or possible management bias in accounting estimates. So SA 240 says that value accounting estimates are reasonable and they are adequate. Then form of opinion. Auditor shall express an unmodified opinion, okay, or the clean opinion. When the auditor concludes that the financial prepared are all in material respects as per accordance with applicable FRF. And if the auditor concludes that based on the audit evidence, the financial are not free from material misstatement, and he is unable to obtain that the financial statements are free from material misstatement. In that case, he shall modify the opinion as per SC 705, modification of the opinion. Okay, if financials are prepared in requirements of fair presentation, and then if it do not achieve the fair presentation, audit shall discuss with the management and shall whether it is necessary, shall determine whether it is necessary to modify the opinion as per SA 700. And when they are prepared with a compliance framework, in that it is not required to evaluate whether they achieve the fair presentation. However, if it is misleading, in that case, audit shall discuss the matter with management, and depending how it is resolved, audit shall determine how to communicate in the auditor's report. Okay, auditor's report should be in a written form and requires the specific heading which are intended to assist the auditor's report more recognizable and conducted in the standards of auditing. So elements or the headings: the first one is title. Shall have the title clearly indicate the report of an independent auditor. Addressee shall be addressed as appropriate based on the circumstances of the engagement. Law, regulation, or the terms of the engagement may specify to whom audit report is addressed. So when audit is represent to whom the report is prepared. Okay, so for either shareholders or the TCWG whose financial statements are being audited. And then when it comes to audit opinion, this is important. The first section of audit opinion shall include audit report shall include auditor's opinion and shall have the heading opinion. It should have the heading opinion. And The opinion section should include these 5 things. The first one, identify the entity whose financial statement are been audited. State that the financial statement are audited. Identify the title of each statement in the financial statement. Refer to the notes or the summary of significant accounting policies. What is this? And then specify the date or period covered by financial statement comprising the financial statement comprising in the financial statement. 5 things. First one, identify the entity whose financial statement are been audited. State that the financial statement are audited. Identify the title of each statement. Refer to the notes and specify the date or period which it is covered. And audit shall express an unmodified opinion if it is not appropriate as so when an auditor expresses an unmodified opinion, in that case it is not appropriate to use a phrases like with foregoing explanation, subject to these kind of things, conditional or weakening of the modification might takes place. So what is the basis for opinion? So soon after the opinion section after the section, this should include basis for opinion. So this should include the 4 things. State that the auditor has conducted the audit in accordance with SA. The section of the auditor's report describes the auditor's responsibility. It should include the statement that the auditor is independent in accordance with relevant ethics and things, and he has fulfilled the ethical responsibilities accordance with the requirements, and state that he believes that audit evidence has been obtained and sufficient and appropriate for the basis of opinion. 5 things basis for opinion. He has to say that audit was conducted in accordance with SA, and this he has to say that and there is a section in audit report, it describes the audit's responsibility. Then it should include a statement saying that he is independent and he has fulfilled all the requirement of the ethical responsibilities in accordance with the requirement. And he also should say that he believes that whatever audit evidence he has obtained, that is sufficient and appropriate to the basis of audit opinion. So as a going concern where application shall report about accordance with SA 570, and key matter also same thing, he has to otherwise law shall accordance with OPLF. Other responsibility of financial statement. Who is responsible? Management. The audit report shall include a section heading responsibility of financial statement for financial statement, responsibility of management for financial statement. The section also should describe the management responsibility for preparation of financial statement in accordance with FRF and such internal control as management may determine necessary to enable the preparation of financial statement that are free from material misstatement and whether due to fraud and error. First one, the responsibility to prepare financial statement in accordance with FRF and such internal control that management thinks it is necessary to enable the preparation of financial statement that are free from material misstatement and due to fraud and error. Then, second thing, assessing the entity's ability to continue as a going concern, whether the use of going concern basis is appropriate, as well as disclosing, if applicable, the matters relating to going concern. Done. Oversight of financial reporting process. The section includes that this section of the audit reports shall also identify those responsible for oversight of financial reporting process, and when the management is responsible for such are different from the management, like those who are responsible, whether they are different from the management. In this case, the heading of the section also shall refer to the TCWG, that they are appropriate in constitutional legal framework of the entity. Auditor's responsibility of financial for audit of financial statement. Okay, this one is very big, let me tell you. The auditor's report shall include a section which saying that auditor's responsibility of financial statement. This section shall also report that state the objectives of the auditor are two things: to obtain reasonable assurance whether the financial are free from material misstatement due to fraud and error, and issue a report that includes the auditor's opinion. 2 things. State that the reasonable assurance is a high-level assurance and not a guarantee that it has conducted with CA and SS and will always detect the material misstatement when it exists. Then state that a misstatement can arise from fraud and error, and describe that they are considered material if individual or at an aggregate they could reasonably be expected to influence the economic decisions of the user taken on these FSS, or provide a definition of description of materiality in accordance with applicable FRF. Done. And auditor's responsibility of financial statement shall further stated as a part of accordance, he shall exercise professional judgment and maintain professional skepticism throughout the audit, and describe an audit by stating that the responsibilities are to identify and assess the risk of material misstatement, whether due to fraud and error, to design and perform the audit procedure responsive to those risks, and obtain audit evidence in sufficient and appropriate basis of auditor's opinion, to obtain understanding of internal control relevant to the audit in order to design audit procedure that are appropriate in the circumstances. Done. Then to evaluate the appropriateness of accounting policies and reasonable of accounting policies, estimates and disclosure made by management, to conclude that the management use of going concern basis and use of accounting and appropriateness of management use of going concern basis, and whether material uncertainty exists related to conditions that may cause significant doubt in entity's ability as a going concern. Okay, so further he shall say that he exercise professional judgment and maintain professional skepticism, describe that he has to identify risk of material misstatement due to fraud and error, and perform procedures for risk, and shall obtain audit evidence that are sufficient and appropriate for audit opinion, and to obtain understanding of the internal control relevant in order to design audit procedures that are appropriate in circumstances, to evaluate the appropriateness of accounting policies and the reasonableness of accounting estimates that and related disclosures made by management, to conclude on appropriateness of management use of going concern on the basis of accounting, and with the whether the material uncertainty exists that may cause significant doubt in the entity's ability to continue as a going concern. Then it's the auditor's responsibility of financial statement section shall also state that the auditor communicates with TCWG regarding, among the matters, the planned scope and timing of the audit, significant audit finding, and include significant deficiencies in internal control. This one we have studied. Okay, so he shall communicate any other matters, the planned scope and timing of audit, the significant findings, and the significant deficiencies in the internal control whether he has identified. And in case of listed company, he shall state that the auditor provides TCWG with the statement that the auditor has complied with ethical requirement, and regarding independence, communicate with them all relationships and the other matters reasonably bear and circumstances and related to safeguard. This one they did not teach. And location, so where the auditor's responsibility should be there in the financial statement within the body of auditor's report with an appendix to the auditor's report in case it includes a reference to the location of the appendix, and by specific reference within the auditor's report to a location such as description of a website or of an appropriate authority where law and regulation or national accounting standards, auditing standards expressly permit. Okay, other responsibilities, simple thing. If you have any other responsibilities and in addition you want to say something, na, in that case you have to make a separate section and say that report on other legal and regulatory requirement. Then signature is a report. The auditor's report shall be signed, and the report is signed by the auditor or the engaging partner in his personal name, and when firm is appointed, it should be in a personal name and even the firm's name. And the partner report shall need to mention his membership number assigned by the ICA, and shall also include the registration number of the firm wherever applicable allotted by ICA, and the place of the signature where the city where the audit report is being signed. Date. The audit report shall be dated no earlier than the date on which the the auditor has obtained sufficient and appropriate audit evidence with the base of which is the base of auditor opinion, including evidence that all the financial statement comprising all the statements that comprise the financial statement, including the related notes have been prepared, and those with the recognized authority have asserted that they have taken responsibility for financial statement. Date, simple thing, it should not be earlier than the date in which auditor has obtained sufficient and appropriate audit evidence on the base which auditor's opinions are there. And it shall also say that the statement that comprise the including the evidence that all statement that comprise the financial statement, including related notes, have been prepared, and those with the recognized authority have asserted that have taken responsibility. But the date of audit report informs that the user of audit report that the auditor has considered the effect of events and transaction on which the auditor became aware till up to that date. Okay, you didn't. So Recently, it was noticed that the financial documents and certificate were attested by the third party misrepresenting themselves as a CA members. Okay, so this was misleading for authority. So this is unique document identification number. Chartered having full-time certificate of practice can register into UDIN portal and generate a UDIN registering certificate attested by them. Accordingly, UDIN is required to mention. Auditor is mentioned to it is required to mention the UDIN in respect of each audit being signed by him, along with the membership number signing the report. Okay, done. Then we'll go for this. So SA 705 modification of opinion in the independent auditor's report. Okay, you know this already. Simple. If they are materially misstated and it is not material, same case. If it is misstated, in that case it is not pervasive qualified opinion, it is pervasive adverse opinion, and he is not unable to obtain the audit evidence. Now in that case it is qualified opinion, and if it is pervasive, disclaimer of opinion. Simple. So what is the objective of the auditor? As per the 705, no? 705 the modification independent auditor. The objective of the auditor is to express clearly and appropriately modified opinion on the financial statement necessary when he concludes that the audit or evidence obtained by the financial statement are free or not free from material misstatement. The audit evidence obtained from the statement are not free from material statement, and he is unable to obtain the sufficient and appropriate audit evidence to conclude that the financial statement are free from material misstatement. Okay, done. So disclaimer of opinion. This is very extremely rare case involving multiple uncertainties. The auditors conclude that notwithstanding anything in substantive obtains sufficient and appropriate audit evidence regarding the individual uncertainties, it is not possible to form an opinion on the financial statement due to potential interaction of these uncertainties and their possible cumulative effect on the financial statement. Okay, then circumstances when the modification of opinion is required. Two circumstances. The first one is the auditor concludes that based on the audit evidence obtained, the financial statement are not free from material misstatement, and is unable to obtain an sufficient and appropriate audit evidence to conclude maybe due to following reasons. Okay, first one, this one, well, not free from because of inappropriate accounting policies, inappropriate application of selected accounting policies, inappropriate or inadequate disclosures. Okay, three things. And he's unable to obtain sufficient and appropriate audit evidence because of limitation imposed by the management, circumstances beyond the entity's control, and circumstances related to nature timing of audit work. Okay, limitation after audit has accepted the engagement. In that case, he has to request the management to remove it, and if management refuses, he has to communicate to TCWG, and he has to determine whether there is any alternative procedures available to obtain sufficient and appropriate audit evidence. If he is unable to obtain the sufficient and appropriate audit evidence, he has to determine possible effects on the financial statement. If it is not pervasive, go for qualified. If it is pervasive, he has to resign if possible. If it is not possible, then he has to communicate to TCWG and disclaim the opinion. Done. And form and content of the audit report. When opinion is qualified, first thing when we say opinion, we say qualified, adverse, or disclaimer of the opinion as appropriate in the opinion section. Okay, the second thing what you have to do is in addition to specific elements as required by say, you have to amend the heading also. Heading, like we say basis for the opinion, you have to say that basis for qualified opinion, basis for adverse opinion, or basis for disclaimer of the opinion. Then within this section, you have to include a description of matter giving rise to the modification. Then what are the language to be used when it comes to qualified opinion? So expresses a qualified opinion due to material misstatement in the error, material misstatement in the financial statement. He shall say that except for the effects of the matters described in the basis of qualified opinion. Okay, when it comes to fair presentation, he has to say true, and it gives a true and fair view. When it comes to compliance framework, he has to say all material respects. Okay, listen, when it comes to qualified opinion, he has to say except the effect of the matters described in the basis of opinion. And when he is unable to obtain sufficient and appropriate audit evidence, he has to say except for the possible effects of the matter. Here is to say except the effects of the matter, here except the possible effects of the matter. Then when it comes to adverse opinion, he expresses opinion. In that case, because of this matter significant the basis of opinion, when reporting accordance with the financial reporting fair presentation framework. Now he has to say FS do not present fairly, or it does not give a true and fair view accordance with FRF. When it comes to compliance framework, now he has to say it has not been prepared in all material aspect when it comes to applicable FRF. Disclaimer of opinion: due to inability to obtain sufficient and appropriate audit evidence of the audit, he shall say that the audit does not express an opinion, first case, and because of the significant matters described in the basis of disclaimer of opinion section, and auditor has not been able to obtain sufficient and appropriate audit evidence on the basis of opinion on the financial statement, and later he has to amend the opinion section saying that which indicates the financial statement have been audited to he has been engaged to audit. He should not say he has been audited, he has engaged to audit. Consideration when audit disclaims an opinion, he has to just shall not when it comes to, so unless required by law and regulation, when he describes an opinion, he shall not include any key audit matter as per 701. Why? Because when he includes a key audit matter, it gives rise to a disclaimer of opinion. It may suggest that the financial sources are more credible. It would be appropriate in the circumstances. Then it would be inconsistent with the disclaimer of opinion as a whole. Okay. Then communication with TCWG. When auditor expects he wants to modify the opinion, he shall communicate with the TCWG, and that circumstances like why it led to some expected modification and wording for the modification. Description of auditor's responsibility. This whatever you have studied before itself, same thing comes that disclaims an opinion finds that he is unable to obtain sufficient and appropriate audit evidence, and he shall amend the description of audit responsibility as per required 700, including the following. He shall say three things. First one, his responsibility is to conduct an audit on the entity's financial statement accordance with standards of auditing and issue an audit report. Second one, you have to say that because of the matters described in the basis of disclaimer of opinion section, he is not able to obtain sufficient and appropriate audit evidence based on the opinion of the financial statement, and he has to state that his independence and required as per 700. Clear? Three things: his responsibility that he has in conduct of audit of FS, and because of the matters described basis for this that he has not unable to obtain sufficient and appropriate audit evidence for the basis of the opinion, and the statement that auditor's independence and the other ethical requirement. Done. We are done with 701. Then we'll go for 706. Emphasis of matter paragraph or other matter paragraph in the independent auditor's report. What are the objectives of the auditor? So UIM, okay, to draw users' attention when in the auditor's judgment it is necessary to do so by way of clear additional communication in the auditor's report. To draw users' attention in judgment, saying that to draw by way of clear additional communication. Okay, a matter appropriately presented or disclosed in the financial statement are important that it is a fundamental to users' understanding on the FS, and the other matter that is relevant for the user's understanding of the auditor's responsibility or auditor's report. Clear? First one, a matter appropriately presented or disclosed in the financial statement, that is such important that it should be that it is fundamental for the user's understanding on the FS, and the other matter is that relevant for the user's understanding the auditor's responsibility and the auditor's report. First we'll go for UOM. If the auditor consider necessary to draw users' attention of the matter presented disclosed in the financial statement and as per the auditor's judgment, and such importance that it is a fundamental to users' understanding of the financial statement, auditor shall include the UOM paragraph in the auditor report. Okay, so when 701 applies, that is modification modification implies. Now in that case, the matter is communicated in UOM para is not determined when 701 key audit matter is applies. Now in that case, UOM para has not been determined to be a key audit matter to be communicated in audit report. Okay, so when there is CAM, in that case, this is not UM para is not to be determined as scam. Okay, so separate section for UM paragraph. An auditor includes UM paragraph. Now he shall include a paragraph saying with a separate section saying that with an appropriate heading that includes a term UM. Okay, so it include a clear paragraph saying that reference to the matter being emphasized on where the relevant disclosures have been fully described in the audit in the like matter can be found in the financial statement, indicate that auditor's opinion is not modified with the respect of these things. Okay, and UM para is not a substitute for a modified opinion, that is 705. A disclosure in the financial statement as per applicable FRF, and the 570 wala thing, report accordance, that is material uncertainty exist relating to the events or condition that may cause significant doubt in the entity's ability to continue as a going concern. Then other matter paragraph, it is audit considers is necessary to communicate a matter other than those presented and disclosed in the financial statement that in auditor's judgment is relevant for the user's understanding of the three things: audit, auditor's responsibility, and the audit report, and shall include other matter paragraph in the audit report. Okay, unless it is not prohibited by law. And when 701 applies, now that is key audit, it is not meant to be a key audit matter. Okay, clear? Separate section is when he uses other matter paragraph. Now he should include a separate section with the heading of other matter paragraph. Communication with TCWG. If the auditor expects UM or other matter paragraph, now he shall communicate with the TCWG regarding the expectations and the wording of the paragraph. Same thing. So, and the placement of the UM para or other paragraph. The placement of UM para or other paragraph, now it depends on the nature of the information to be communicated and auditor's judgment as to relative significance of such information with respect of other elements to be reported as per 700. It depends on the nature of the information, and when it comes to auditor's judgment and relative significance with the other elements. Okay, emphasis of other UM paragraph. When emphasis of matter paragraph relates to applicable FRF, in that case auditor may consider it necessary to place immediately after the basis for opinion. When it relates to applicable FRF, that in that case he might consider to place it immediately after the basis for opinion. Okay, then when key audit matters are present in auditor, in that case an emphasis of matter may be presented before or after the key audit matter, depending upon the auditor's judgment. And to add further context for UM, now he may say that UM as per subsequent event to differentiate UM paragraph with individual matters. Okay, other matter paragraph. When it comes to other matter paragraph, now it is included to draw attention of users to the matter to other reporting responsibility addressed in audit report. So they may be included in a report on the legal or regulatory section. Okay, this may be included in the report on other or legal and regulatory requirement section. When relevant to all auditors responsibility or users understanding, the other matter paragraph may be included in separate section following this thing. Okay, report on other. When key audit matter is presented, in that case other matter is also considered, that he may add further context saying that other matter paragraph or such as other matter paragraph, so for it to differentiate the type of this thing. Clear? Next one, 701, that is key audit matter in the independent audit report. Scope is to the auditor's responsible to communicate key audit matters in the auditor's report. And the objective of the auditors are to determine the CAM and having a formed an opinion and financial statement to communicate those matter by describing them in the audit report. Objective to determine CAM having formed an opinion in the FS to communicate those matter in the auditor's report. Key audit matters are what? These are the matters that in auditor's professional judgment were most significant in audit of FS of current period and are selected from matters communicated with TCWG. What are these? These are those matters that in auditor's judgment are most significant in audit of FS in current period, and these are matters selected from the matters communicated with TCWG. What is the purpose for key audit? Purpose for communicating key audit matter: to enhance the communicative value of the auditor's report by providing greater transparency. So communicating this provides additional information to intended users to understanding those matters that auditors professional judgment were most significant in the current period. Okay, then it also assists the intended users in understanding the entity and the areas of significant management judgment in the financial statement. And it may also provide intended users the basis for further engage in the with management and TCWG about certain matters relating to entity, about the audited financial statement or the audit that was performed. So why communicating purpose, why we communicate? First one, to enhance the communicative value of the audit report by providing greater transparency, and to provide additional information to intended users to understanding the auditor's professional judgment on these things, and to assist the intended user to understanding the entity and the areas of management judgment, and to provide intended user the basis for further engage of management and TCWG. Clear? Applicability. This essay applies to audit of complete set of general purpose financial statement of listed entities. The circumstances where audit otherwise decide to communicate CAM, and essay also applies to the auditor when it is required by law of regulation that should apply. So this applies to three things. First one, when it is a listed company and auditor decides that he has to communicate, or whether it is required by law of regulation. However, 705, what is 705? Modification of opinion. When it prohibits the auditor, so when 705 is there, it prohibits the auditor from communicating CAM, okay, unless it is required by law of regulation. Determining CAM. So auditor shall determine CAM from those matter communicated with TCWG, those matter that are required significant in auditor's attention in performing the audit. In making determination, the audit shall take into consideration these three things: the higher risk of material misstatement, the auditor's judgment in areas that are significant management include, and including accounting estimates and estimation uncertainty, the effect of significant events or transaction that occur during the period. See, determining CAM, okay, from those matter that are communicated with TCWG, that are from those matter that are required significant auditors attention in performing the audit. And while determining CAM, he has to consider these three things. First one, areas of higher risk of material misstatement, where auditor's judgment relating to the affairs that involve significant management judgment also, including accounting estimates and high estimation uncertainty. Okay, the effect of audit of significant events or transaction. The last one is effect of audit of significant events or transaction during the period. Communication of key audit matters. The audit shall describe each key of matter using a CAM, using a appropriate subheading in a separate section of audit report under the heading CAM. Okay, so the introductory language should be: the CAM are those matters that are in professional judgment were most significant to the audit of the financial statement, and these matters were addressed in the context of the audit of financial statement as whole performing opinion, and this does not provide a separate opinion on these matters. So communicating, he should describe each key audit matter with appropriate subheading, and there should be a separate subheading called key audit matters. The introductory language should be these are the matters that according to the auditor's professional judgment are most significant matters, and these matters were addressed in the context of audit as a financial statement as a whole, in which the auditor's opinion is based, and this does not provide a separate opinion on these matters. So description of key audit matters, like each key audit matters. So it shall include a reference to each key audit matter, why the matters were considered to be most significant, why it is considered to be most significant according to his judgment, and how the matters were addressed, why and how. Communicating key audit matter is not a substitute for a disclosure of financial statement. Okay, is not a substitute for these four things. First one, disclosures of financial statement as per applicable FRF. When substitute for auditor expressing a modified opinion as required by circumstances in specific as per 705. Substitute for reporting as per accordance with 570, that is material uncertainty exists that may cause significant or any separate opinion. See, these two things, now it was already there. A substitute for disclosure in the financial statement as per applicable FRF, so expressing a modified opinion as per 705, reporting as per accordance with 570, and separate opinion. So these four things, this is mandatory. So key audit matter cannot be substitute for these four things. Okay, first one, disclosures of financial statement, modified opinion, reporting as per 570, that is going concern, and the separate opinion. Circumstances when key audit matter may not be communicated to auditors report, when law and regulation requires precludes that public disclosure about the matters, when law and regulation requires, okay, when in extremely rare circumstances now, when the matter should not be communicated in the auditor's report because there may be adverse communication would apply and reasonably expected to outweigh the public interest benefits of such communication. In that case, it shall not apply publicly disclosed in the information about the matter. I'll tell you two things it should not be communicated when law and regulation specifies. In extremely rare circumstances, when it is communicated, there may be adverse consequences that may outweigh the public interest. Okay, so when these things will not apply when these are already publicly disclosed information. CAM by nature. So a matter giving rise to modified opinion in accordance with 705 or a material uncertainty that is 570 events that may constitute are by nature a CAM. So these two, this 705 and 570, these by nature they are CAM. We are deeming it as a CAM. And this matter shall not describe key audit matters. Report on the shall not be described in key audit matter function. So these two shall not be described in key audit matters, and this shall be described, rather he should report these matters in accordance with applicable SS and include a reference to basis of qualified or adverse opinion and a material uncertainty to going concern section in the key audit matter section. Okay, so these two are deemed to be a CAM, and this should not be included in the key audit matter. Rather, he has to say that you might report according with essays, and he should give a reference saying that basis for qualified opinion and material uncertainty related to going concern and CAM. If there is no key audit matter to communicate, or there is only one key audit matter to communicate, and then he should form a separate section saying that key audit matters communication with TCWG. The auditor shall communicate to TCWG those matters that are determined to be a key mandate matter, and if applicable, depending on the factors and circumstances, auditor's determination of whether there is no key audit matters. Okay, what are the two things he has to communicate? The matters that are determined to be key audit matter, if applicable. Why matters are not like auditor's determination that there is no key audit matter to communicate in audit report. Two things done. And documentation, what are the three things he has to document? First one, the matters that are required significant auditor settled the rationale behind whether it is key audit matters. Okay, three things: the rationale, why it is a key audit matter, the rationale behind the auditor, why it is a key audit matter or why it is not a key audit matter, and the other rationale that the auditor determination that there is no key audit matter shall communicate in the audit report that the only key audit matter shall be modified and the material uncertainty, that is 705 and 570, and the rationale determination not to communicate the key audit matter. So what are the three things he has to document? Why, the rationale behind the determination of key audit matter or not determination of the key audit matter. If there is no key audit matter, he shall say that the only key audit matters are the modified opinion and the material uncertainty, and where applicable, he has to say that why didn't he communicate the key audit matters that are determined in auditor's report. Okay, clear? Thank you. Reporting requirement under the Companies Act 2013. Okay, so section 143, you all know, powers and duties of auditors and auditing standards. So subsection 1 says that every auditor of the company shall have right of access of at all times the books of accounts, vouchers of the company, whether kept at the register office of the company or at any other places. Okay, so he shall be entitled to inquire from the officers of the company such information and explanation he may be considered necessary for the performance of the duties, and amongst other matters inquire the following matters. Among other, he has to inquire the following matters. Those are the 6 important, that is A, B, C, D, E, F. Okay, A, that is advances, whether loans and advances made by the company or on the basis of security has been properly secured, whether the terms has been prejudicial to the interest. B is what? Book entries, whether the transactions represented are merely a book entries or prejudicial interest of the company. C is what? Cost. Okay, so and whether a company not being investment or a banking company, whether they have purchased assets or share or debentures of the company in the, or any other securities of the company, and whether they have sold to less than for the price they have purchased or what. D is whether the loans and advances made by the company has been showed as deposits or what. E is whether personal expense has been charged to revenue or what. F is whether whether they have issued the shares to the cash and whether actually they have been recorded for such allotment. If no cash has been actually received, now that case whether the position is so stated in the accounts of books or balance sheet is correct or correct, regular, or it is not misleading. So remember, first loans and advances of the security, whether it is prejudicial to interest. Second, whether the book entries are not merely a book entries, whether the accounts, whether transactions are not merely book entries, whether not a company not being investment or a banking company, whether they have invested in shares and whether they have sold it for price less than whatever they have purchased, whether the loans and advances are classified as deposits, whether the personal expense has been charged to revenue account, whether they have purchased shares to the cash, and whether it is actually received or not. Okay, so if it is a company is a holding company, in that case it has a right for access of records for all its subsidiaries and associate companies insofar as it relates to consolidation. Okay, 142 subsection 2, it says that auditor shall make report to all the members of the company on the accounts examined by him on every financial statement which are required under this act to be laid before the company in the general meeting, and he shall report after taking into account the provisions of this account and accounting and auditing standards and matters required to be included in the audit report or any rules thereunder or any other order, and to the best of his information and the knowledge. And that said, the said accounts financial statement should give true and fair view of the state of the company's affairs at the end of its financial year, and the profit or loss cash flow for the year ended, and matters may be prescribed. Okay, section 143.3, report on other elements. This is important. Okay, so there are these 5 6 7 8 9 10 things are there. First one is one, whether he has sought, the auditor has sought all the information and explanation to the best of his knowledge and belief. Then two is whether books, that is proper books of accounts, have been maintained and as per required has been kept of the company so far, and whether proper returns has been made, and even whether the for the purpose of audit has been received has not been visited. Okay, proper returns for the proper returns by this branch are made. See, that is tree, you can say that whether the report of the branch office of the audit has been taken care and sent to him or not. And then with 4 is balance sheet and profit and loss are dealt as per agreement with the books of account and returns. And 5 is whether he has to whether and in his opinion the financial statement comply with the accounting standards. 6, observations and comments of the auditor on financial statement is adverse if any adverse in functioning of the company. 7, whether the director is disqualified from being a director as per section 164. 8, whether the qualification, reservation and adverse remark as per the maintenance of book of accounts is there or not. 9, whether the company has adequate internal financial control in reference with IFS. And the 10 is other matters. Okay, so these matters, this shall not apply to a private company which is a one-person company and a small company and whose turnover is less than 50 crore as per latest audited financial statement, and at any point its borrowing should not exceed 25 crores or it should be less than 25 crores. Okay, and what are these other matters? Simple other matters are, the first one is the pending litigation or whether they have made provisions as per law or accounting standards for the material foreseeable futures or even a long term, whether there has been delay in transferring amount or the investor education fund or not, whether dividend has been declared and paid during the year with the compliance with section 123, whether the company has used an accounting software for maintaining its books of account that has a feature of audit trail that has been operated and not being tempered and has been preserved. Okay, So audit releases a step-by-step sequential record which provides evidence for the document history of financial transaction at its source. Auditor can trace every step of the financial data and the particular transaction right from the general entry to the source account, which helps an audit trail. Okay, reasons 143.4. Whether any company has whether any matters of the matters required to be included in the audit report under this section is answered negative or with a qualification, and he should give reasons for that. Okay, then branch audit, that is covered next, and every auditor shall comply with accounting standards, and this one is just leave. And section 143.12, okay, related to report whether if an auditor of the company he has reason to believe that there is a fraud and expected, and it involve individually amount of more than 1 crore in that case being committed by officers or employee that is more than 1 crore, he has to report to central government, and if it is less than 1 crore he has to report to the audit committee, that if audit committee is not there, then for the board. Okay, done. Caro. So Caro, no, section 143.11, it says that a central government may in consultation with NFRA by general or by special order direct respect of such class or description of the companies as may be specified in the order, that the audit report shall also include a statement on matters that may be specified therein. Okay, applicability, for whom this is applicable. So it is applicable for every company including the foreign company as per section 42. Okay, but this byte OS is not excluded. First one, banking company, insurance company, or section 8 company, byte, and then a 1% company and a small company, then a private limited company not being a subsidiary or holding of a public company with 1 crore, 1 crore and 10 crore. Okay, first one is paid up, and reserves and surplus should be less than 1 crore, borrowing should be less than 1 crore, and revenue should be less than 1 crore. Done. Then discussion, a company discussion on small, a company is covered under definition of small company. It will remain exempted from the applicability of the order even it falls under the criteria of specified private company. Okay, so definition of small company is simple. It's paid up share capital and turnover should be less than 4 and 40 crores. Done. We'll go for Paro. So para 3, property, plant and equipment. Okay, the first one is property, plant and equipment. So you have to maintain 7 things. Okay, the first one is proper record should be there for tangible, then for intangible, then physical verification, material discrepancies, title deeds, revaluation, and even the benami property. The first one, you should maintain whether the company is maintaining what and all you have to check. Okay, whether the company is maintaining proper records showing full particulars including quantitative details and situations of property, plant and equipments. Done. First, records should show proper records with full particulars, quantitative details and situations of property, plant and equipment. Then proper records of intangible assets. It should maintain proper records of intangible assets or full particulars of intangible assets. Okay, next, physical verification, whether this property, plant and equipment have been physically verified by the management at a reasonable intervals. Then material discrepancy, whether any material discrepancies were noticed on such verification, if so, whether same has been dealt with in the books of accounts or not. Then title deeds, whether the title deeds of all the immovable property other than the properties that are in a lessee and the lease agreements disclosed in the financial statement held in the name of the company, if not, provide the details in the format below. Then revaluation of PP, property, plant and equipment and intangible assets. So whether the company has revaluated PPE including the right to use or even the intangible assets during the year. If so, whether the revaluation is based on the valuation of registered valuer, and specify the amount of change if the change is more than 10% or more of the aggregate value of net carrying value of each class of property, plant and equipment or tangible assets. Okay, and proceedings again, benami, whether any proceedings have been initiated or pending against the company or for holding any benami property under the transaction rules made under. So whether the company has properly disclosed the details in the financial statement or not. Okay, broader view. Yeah, first one, whether proper records is maintained or not, and whether whether it is proper maintained in full particulars and intangible assets or not, whether physical verification is done or not, whether material discrepancy is found out, whether how it is dealt in the accounts, then whether title deeds of immovable properties in the company's name or not. If not, provide the details. Then a revaluation of assets has been done on the during, and this revaluation is based on a registered value or not, and if there is 10% or more change in aggregate value, then specify the amount. Okay, then whether any proceedings is pending or initiated against the benami property. Then the second one is inventory and physical verification, whether the physical verification of inventory has been conducted at a reasonable interval by the management, and whether in an opinion of the auditor the coverage and procedure of such verification by management is appropriate. Then discrepancy of more than 10%, if there is any discrepancy of more than 10% of aggregate each class of inventory that were noticed to, whether they have been physically properly dealt with in books of accounts. Okay, then working capital limit, whether any point on time of the year the company has sanctioned with a working capital limit of excess of 5 crore, the aggregate from banks and financial institutions on the basis of security of current assets, whether on the basis of current assets, whether the quarterly returns of the see excess of 5 crore in aggregate from banks or financial institutions on the basis of security of current assets, whether the quarterly returns or the statements filed by the company with such bank and financial are in agreement with books of account. If not, give details. Done. I know this is clear. Then 3, investment made by the company. Okay, whether during their company has provided loans or provided advances in nature of loans, furnished guarantee or provided any security to any other entity. So if yes, so indicate the aggregate amount during the year and the balance outstanding in the balance sheet in respect of such loans and advances to subsidiary, joint venture and associate company, and even the same balance sheet to parties other than the subsidiary, joint ventures and associate. Whether the company has made whether the investment made guarantee provided and security given in terms of conditions of the grant of all loans and advances in the nature of loan, and the guarantees provided are not prejudicial to the interest. Okay, whether the investment made or guarantee provided and security given are in terms and conditions of the grant of loans and advances in the nature of loans. Okay, whether it is not, then the guarantees provided are not prejudicial to the company's interest. Then in respect of loans and advances, the nature of loans, whether the schedule of repayment of principal and payment of interest has been stipulated, whether the repayment of interest are regular or not. Okay, then if the amount is overdue, then state the amount that is overdue for more than 90 days, whether reasonable steps has been taken by the company to recover the principal and interest amount or not, whether loan or advance of the or in nature of the loan granted has fallen due during the year and has been renewed or extended, and fresh loan has been granted to or settled the overdues of existing loans given to the same parties. If so, specify the aggregate amount of such due, renewed or extended or settled by fresh loans, and the percentage of aggregate to the total loans or advances given the year. Okay, whether the company has granted loans or advances in the nature of loan either payable in demand or either repayable on demand without specifying the term or period of repayment. In such case, specify the aggregate amount and the percentage to the total loans and aggregate amount of loans granted to promoters related parties. Okay, then this one is just simple, whether a respective has whether investment guarantees and security provided as per section 185 and 186 deposit accepted. In respect of deposit expected by company or amounts which deemed to be deposits, now whether the directives issued by RBI, the provision of 73 to 76 and other provisions related to Companies Act and rules made by under are applicable and have been complied with. Okay, if not, then the nature of such contravention. 3 things you have to comply: directives by RBI section 73 to 76 and any other provisions of Companies Act and rules, and in that case you have complied or not. If not, then the nature of such contravention. If any order has been passed by company board or NCLT or Reserve Bank of India or any court of the or any other tribunal whether the same has been complied or not. So cost records, it's a simple thing. Whether maintenance of cost record is specified by CG as per 195, whether such maintenance has been maintained or not. What is this? Disputed due, whether any transactions recorded in this book has been okay, repayment of loan. Okay, this one is important. Repayment. 9 is repayment. Whether the company has defaulted in repayment of loan or other borrowings or in payment of interest thereon to any lender. If yes, the period and the amount of default to be reported as per the format below. Okay, read this format. Whether the company is declared as willful defaulter by any bank or financial institution, whether term loan were applied on the basis for the purpose of which loan were obtained, if not the amount for which it is of loan so diverted, the purpose of which it is used may be reported. Okay, so the fund raised on short-term basis have been utilized for long-term or not. If yes, the nature and amount to be indicated. Okay, then whether the company has taken any funds of from an entity or any person in account to meet the obligation of the subsidiary, associate or joint venture. So details on nature of transaction and amount in each cases. Whether the company has raised loans or during by the pledge of security held in the subsidiary, if so give details and also report if the company has defaulted in making payment. So there is 6 points. The first one, if the company has defaulted in making payment, in that case if yes, the period and amount should be given, and whether the company has been declared as willful defaulter, if the term loan has been applied for the purpose, and if not, what are the amount diverted and the purpose for which it should be used, and if the short term loan taken is a long term, if yes, the nature and amount to be indicated, and company has borrowed any funds from an entity on the person in behalf of to meet the obligation of subsidiary, joint venture or the associate company, then the nature and amount should be in case, and whether the company has raised loan by pledging of securities held in subsidiary, joint venture and associate company. In that case it should give details and also report the company report if the company has defaulted in repayment of such loans. Done. IPO, FPO they've asked, I guess, once again. So whether the company raised the money by way of IPO or FPO during the year has been applied for the purpose for which they were raised. If not, details together with or default for subsequent ratification if applicable must be reported. Whether the company has made a preferential allotment or private placement of shares or convertible debenture during the year. If so, whether the requirement of section 42 and 62 has been complied with, fundraised used for the purpose and fundraised used for the purpose. If not, provide the details of such amount and nature involved with non-compliance. Simple. If they have issued a simple, okay, if they have issued money through IPO and FPO, so if they have applied for the purpose or not. If not, the details and default for subsequent ratification should be given. If they have made some preferential or private placement, in that case it should be complied with section 42 and 62 should be complied, and if the purpose for which the fund has been raised is utilized. If not, then details and amounts of sub nature or non-compliance should be given. And this one, section 311. Okay, 11 is fraud. 1 goes to fraud. 1 is always fraud, bro. Why? Because it is 1. I know you did not get it, but still. Whether any fraud made by the company or fraud made on the company has been noticed or reported during the year. If yes, the nature and amount of nature and amount involved should be indicated. Whether any report under subsection of 12 or section 143 of the Companies Act has been filed in the form of ADT prescribed to the central government. Whether the company has considered the whistleblower complaints, if any, received during the year by the company. Then if the company has as per the note on Karana, while reporting under the clause regarding the amount involved in the fraud, it may be also considered principles of materiality. So Nidhi company, 12 is Nidhi, 11 is fraud, 12 is also fraud because she is Nidhi. Whether the Nidhi company has complied with the net own fund to deposit ratio, that is 1:20 to meet the liability. Whether Nidhi has company has made 10% of unencumbered term deposits as specified by rules. Whether any default has been made in the payment of interest or any period, if so details. Then then section 13, related party. After that is related party. So related party complied with section 178 and 188. They have been disclosed in a financial statement or not. Even this one is easy. This one is easy. This one NBFC. Okay, NBFC is 10 plus 6, 16. NBFC 16. Okay, NBFC 16. NBFC 16. Remember whether the company is required to be registered in section 14IA by the Reserve Bank of India. If so, whether register has been obtained or not. Whether the company has conducted any NBFC non-banking financial or housing activities without the valid certificate of registration from the RBI or not. Whether the company is a core investment company as defined by the regulation, and whether it continues to fulfill the criteria of CAC. In case of company is an exempted or unregistered CAC, whether it continues to fulfill the such criteria or not. Whether the company has more than one CIC as per the group. If yes, indicate the number of CIC which are as a part. Okay, then CCIC is just a specialized NBFC bank. Okay, so it should be take register as based on asset size of above 100 crore. Then the main business of is acquisition of shares of certain companies. Cash loss, no bro, this also you study. This one, what is this? 19. Okay, 10, 9, 19. 16 is NBFC, 19 is liability. Okay, when whether the auditor is of the opinion that no material uncertainty exists as to the date of the audit report, the company is capable of meeting its liability existing on the date of balance sheet as when they fall due within a period of 1 year from the balance sheet. Matlab it says that auditor is in the opinion that no material uncertainty exists as to the date of audit report, that the company is capable of meeting its liabilities existing in the balance sheet as they fall due within a period of 1 year as the balance sheet date. Okay, so on the basis, so it is taken on the basis of financial ratios, aging report, expected dates of realization, financial payment of financial liabilities, and other information accompanying the financial statements. The last one is CSR. Whether in respect of other than the ongoing project, the company has transferred unspent amount to a fund specified in Schedule 567 of the Companies Act within a period of 6 months of the expiry of financial year. The compliance with the second provision of the has been done or not. Whether in respect of other than ongoing project, the unspent amount of the fund should be transferred within a period of 6 months of expiry of the financial year, whether it is transferred or whether it is complied or not. And whether any amount of remaining unspent whether any remaining unspent amount as per section 5 of this has been transferred to special account in compliance with the provision of this thing. Just read. And whether there is any qualification or adverse remark as respective auditors of the company included in the consolidated financial statement. Indicate the details of the companies as well. Just indicate the paragraph number as a caro and give the adverse remark. Branch office, books of account at registered office, accrual basis, governance system. See, as per section 128(1), every company shall prepare, keep at its registered office the books of account or other relevant books and the papers of the financial statement every year. Every company shall prepare, keep at its registered office the books of its account and the other relevant books and the papers and the financial statement for every year, which give true and fair view of the state of affairs of the company, including that it's of the branch office or office, if any. Okay, and explain the transaction affected if that affects both at the registered office and the branch, and shall such books shall be kept at accrual basis and according to the double entry system of accounting. Okay, clear, I guess. Yes. And place other than the registered office, if you want to change the place, you have to give to the ROC register a notice within the 7 days. And then books kept at the branch office. If the company of branch office either in or outside India maintains a proper books of transaction, they should send a summarized return to the register office and it shall be deemed complied with the section 1. Then audit of branch, who can become. If the branch is Indian, a company auditor, a person qualified to be auditor as per the 139. And if it is outside India, company auditor are qualified as per the accordance with the law of that company. Okay. The branch auditor shall prepare a report on accounts examined by him and send it to the auditor of the company, who shall deal with it and report such matter considered necessary. Then SA 600, kind of important. Principal definition. Principal auditor means the auditor with responsibility of reporting on a financial information of the entity when the financial information includes the financial information of one or more components of the auditor audited by him. He is just a main auditor. Okay. Then the other auditor is other than the principal auditor, with responsibility of reporting on the financial information of a component which is included in the financial information audited by the principal auditor. Then what is a component? It means a division, branch, a subsidiary, joint venture, or associated enterprise whose financial information is included in the financial information audited by the principal auditor. Then the last topic comes the principal auditor's procedure. Consideration by principal auditor before and while using the audit work of other auditor. What are the consideration he has to do? He has to take care of 4 things. Okay, under this other things are there. So first thing, the law may allow the principal auditor to review the component auditor's components account by visiting the component necessary, and he can rely on the other auditor unless special circumstances required by direct visiting the component or to examine the books of account. He can rely on the auditor, and unless special circumstances are there, now you can visit and examine the books of account. Second one, when planning the use of other audit work, he should consider the professional competence of the other auditor in the context of specific assignment. If the other auditor is not a member of ICA, if the other member is not a member of ICA, so when planning, he should when planning to use the work of other auditor, the principal auditor should consider the professional competence of the other auditor in the context of specific assignment if the other auditor is not a member of ICA. Then the principal auditor should perform procedures to obtain sufficient and appropriate audit evidence in the work of the other auditor, that the work of the other auditor is adequate to principal auditor purpose. When examined, he should follow these 4 things. First one, advise the other auditor to use that the advise the other auditor of the use that is made of the other auditor's work and report. Okay, and make sufficient arrangement of coordination and their efforts in the planning stage itself. And the other auditor shall inform the other auditors such that the areas requiring special consideration, the process of identification of intercomponent transaction that may require disclosure, and the timetable of completion of audit. Then advise the other auditor that significant accounting, auditing, or the reporting requirements and obtain a representation and compliance with. Then the last one is the principal audit might discuss with the other auditor the audited procedures applied and review a written summary of the other auditor procedures and finding, which may be in the form of completed questionnaire or a checklist. 4 things. He can rely unless there is a circumstances he has to visit and examine the books of account. While planning, he should consider the professional competence of the other auditor if he is not a member of ICA, and the principal auditor should perform a sufficient and obtain sufficient and appropriate audit evidence that the work of other audit evidence is adequate for the principal auditor's purposes. In that case, he should ordinarily perform 4 things. The first one, he has to advise the other auditor why he has to advise the other auditor the use that is to be made of the other auditor's work, and then he should make a sufficient arrangement for coordination of their efforts in the planning stage of the audit. Okay, then the principal audit shall inform such matters that may require special consideration, the identification of component transaction, and the timetable for completion of audit. And he shall advise the other auditor the significant accounting, auditing, or reporting requirements to obtain the compliance with them. And the last thing, the principal auditor might discuss with the other auditor the audit procedures applied, or review a written summary or the other audit procedures and finding, which may be in the form of completed questionnaire or checklist. Okay, the nature, timing, and extent of procedures will depend on the circumstances of the engagement and the principal auditor's knowledge and professional competence of the other auditor. This knowledge may have been enhanced from the review of the previous audit work of the other auditor. Done with chapter 8.